Good evening, everyone. Weber sir just called me and he is asking to join in next 5 minutes. He's stuck somewhere, so he'll be joining in next 5 minutes. Good evening, everyone. Sir will be joining us within next 2 minutes. Till the time, I would like to know on which topic you want further webinars. You can type in chat box. So we have already tried to cover many different topics, and it includes soft skill. Our first session was on soft skills, and then the next one was on business re-engineering. Then we also had a technical session day before yesterday. It was on GST, and even the yesterday one was on startup valuation. So you can type in the different topics on which you want us to bring different speakers, and you want to gain insights. So it can be any topic. So you can type in chat box. Okay, Rishabh Jain is saying merger and acquisition and transfer pricing. Okay, so we'll definitely note it down and get a session possibly in next week. So I would request Zoha or Shivalik from the committee to kindly note down the topics we are receiving in chat box. And the next suggestion we have received is about artificial intelligence. That is for sure. We are going to have its session. It is already planned and will soon roll out the flyer for it. And Muskan is suggesting very good topic, forensic accounting. It's great that you people are picking up on different topics. So we'll take care of it. Um, Shivalik and Zoa, I request you to kindly take a note of the same. Even I am also noting them down. So Rishabh is suggesting one more topic. If it is possible, a short webinar on benefits of participation in contest elections and other activities like recent Coca-Cola visit, which we cannot think pre-articleship. Okay, Rishabh, will also try to cover this so that you are aware about different aspects before getting into articleship and how to how to make best use of these activities, and also will arrange an awareness session that what all activities are suggested or mandated by board of studies in the interest of a student, so that you can make the best use of it. So definitely, it's a very interesting suggestion, and we'll work on it. So thank you, Rishabh, for your input, and thank you, Muskan, for suggesting it. Oh, okay. I think sir will take just 1 to 2 more minutes. Meanwhile, students, today's topic is ESOP and its intricacies. So, can anyone take a lead and tell us what is your understanding about ESOP? You can also unmute yourself, and we can have a discussion till the time sir joins in. Or you can simply type in chat box. Yeah, Rishabh, you have unmuted yourself.
Hello,
Hello.
good evening, ma'am.
Good evening. Ji, good evening.
मैम ईसॉप के लिए तो मेनली यही होगा कि जो स्टार्टअप के टाइम में मतलब वैल्यूबल टाइम होता है वो अपना मतलब रिस्क फैक्टर ज़्यादा होता है कि कभी भी जॉब छूट सकती है, स्टार्टअप बंद हो सकता है, तो उसमें ज़्यादा काम आता है ईसॉप।
ओके, ESOP उसमें ज्यादा काम आता है। इसको मतलब कंपनीज क्यों इशू कर रही है? उनका मतलब एक रैशनल क्या होता है ESOP इशू करने का?
मैम कैपिटल नहीं होता एम्प्लॉयज को देने के लिए, तो उनको एक बेनिफिट मिल जाता है कि अगर कंपनी सक्सेसफुल होती है तो वो आगे मतलब बेनिफिट ज़्यादा ले सकते हैं अपनी सैलरी के अगेंस्ट में। और मैम उनको मतलब एश्योरेंस मिल जाता है कि हम अगर काम करेंगे तो हमारे को बेनिफिट मिलेगा, तो वो ज़्यादा अच्छे से काम कर सकते हैं उसमें, मतलब अपनी कंपनी समझ कर सकते हैं मैम, ऐसा हो सकता है।
राइट, कि उनको हम एक ओनरशिप दे रहे हैं। मोर ओवर कंपनी ये ओनरशिप देकर उनको एक रिटेंशन दे देती है कंपनी में ना। जस्ट अ
यस
सेकेंड,
मैम।
वेब सर इज ज्वाइनिंग जस्ट। राइट। सो या, सो ऋषभ, दैट इज व्हाट आई वाज सेइंग कि वो क्या होता है, एकदम से शेयर नहीं मिलेंगे। कंपनी ने ESOP दिया, उसका एक वेस्टिंग पीरियड है। तो अगर आप 3 साल कंपनी में रुकते हो, 5 साल कंपनी में रुकते हो, उसके बाद वो आपको ओनरशिप मिलती है। तो कंपनी चाहती है कि लॉन्ग टर्म एसोसिएशन उनकी उसकी एम्प्लॉयज के साथ बनी रहे और बार बार उसे वो रिक्रूटमेंट वाले प्रोसेस में ना जाना पड़े, इसलिए ESOP वो का कॉन्सेप्ट आता है।
Good
राइट।
afternoon, friends. Good afternoon, ma'am.
गुड आफ्टरनून सर, गुड आफ्टरनून।
So, sincere apologies for joining late. Hello, am I audible?
Yes, sir. Yes, sir.
Good evening,
Ji,
everyone.
good afternoon, ma'am. Good evening.
Good evening, everyone. Good evening, sir. Good evening, everyone. I am Muskan Gupta, moderator for today's session, representing Sikasa here. It is my pleasure to welcome you all and respected sir for this insightful webinar. Let me give you all a crisp introduction of sir. So we are welcoming CA Pavak Jain with us for the webinar on our topic, that is ESOP strategies and intricacies. CA Pavak Jain sir is a seasoned professional with over 20 years of experience in finance, corporate law, valuation, mergers and acquisitions, GST advisory, and financial strategy. He is also a partner at Mehra Goel and Company, Chartered Accountants, director at INMACS, registered valuer and category, and also a merchant banker. He is also a member of NIRCC, ICI as a qualified CA. He is also a CS and law graduate and among first registered valuers in India. With his deep expertise, he has been a special invitee at ICI's India's Implementation Committee as well as a visiting faculty at several reputed forums, including ICI, ICSI, and CII. So we are truly honored to have him share his insights with us today. Please join me in welcoming CA Vaibhav Jain, sir. Thank you so much, sir. You may start.
And one more thing I would like to add that Sir is regional council member from NIRC, and despite his busy schedule, he is sparing his valuable time for this webinar. So we are thankful to you, Weber sir. So you may start, sir. Sir, you are on mute. You are on mute.
Oh, good evening, friends. I think sincere apologies for joining a bit late, as I actually, to be true, I missed the date of the session by a day. I thought it is tomorrow and not today. So that is why I am late, and I am very sorry that I could not join in time. But I think thank you so much, CIRC Nikasa team of Merit branch to permit me this opportunity of sharing my knowledge with the students. And I think without taking much time, I'll straight away shift to the topic which has been assigned to me. So, is my screen visible to everybody? Mm, just a second. I think it should now be visible.
Yes, sir.
Is the presentation visible to
Yes,
everybody?
sir.
Yes, thank you so much. And I think so. Employee stock option plan. I am sure that there was some discussion which I overheard while I entered in the meeting, that there was some basic discussion which was started by the colleagues which were internally there in the meeting and managing it. So ESOP, as the name suggests, is we're talking of employee stock option plans. And employee stock option plans are normally given by corporates. These are very popular instrument in startup companies to give the right kind of you can say the incentive and a feeling of a sense of ownership to all startups. ESOP structures and which can be multiple in various companies we'll discuss. ESOP also have so ESOPs strictly can be given only to employees, but we also see in the modern world that there are advisors who are key to the company. Then there are other promoters itself, because sometimes startup may promoters get diluted very early. So for them to come back into the startup, or maybe to up their stake at a stage when they have given a particular landmark or a point where their equity can be increased. These options are called management stock options, which are given to the promoters. And when they're given to advisors, they're called advisory stock options. सब तीनों न्यू वाइन ओल्ड बॉटल है, एक ही तरीके की चीज है जो तीन नामों से है, डिपेंडिंग ऑन द पर्सन हु हैज टू टेक इट. बाकी मोर और लेस एवरीथिंग इज क्वाइट सिमिलर. So when we go to stock options, I already told you that these are three kinds: ESOP, ASOPs, and MSOPs. So of course, our primary focus will be ESOPs, and wherever you need to differently look at a ESOP or a MSOP, at that stage, I'll tell you कि ये चीज differentiator है. This is something which one needs to see separately for a ESOP or a MSOP. बाकी more or less whatever I say for ESOP, most of the things hold muchandis for ESOPs and MSOPs. So employee stock option plan, of course, grants ownership, aligns interests, provides savings. These are all things which are there, reasons why this product exists in the real world. So these are important terms which one needs to understand before one gets into how do you account for it, how do you can say do valuations, what is the role of valuations, what are the kind of valuations which are applicable. वो सब कुछ करने से पहले हमें 3-4 टर्म्स है जो पता होनी चाहिए. पहली टर्म है ग्रांट प्राइस ऑब्लिक एक्सरसाइज प्राइस. So for example, let us work with examples so that it is easier to understand. So there is a company whose share is fair value is 100 rupees per share, and the face value, which is the nominal value of the share, is 10 rupees. So I go to a employee A, or maybe say Ram, and I say, Ram, if you work with me for 3 years, I'll give you 5,000 employee stock options today. And if you work for 3 years, each year, 1/3 of them will get vested to you. Now, so this period of 3 years is known as the vesting period, over which the employee becomes entitled. What does it mean by saying 1/3 every year it will get vested into you? So supposing Ram leaves the job after 1.5 years, then he will get only 1/3 of 5,000 share options that I've given him. Whereas if he stays for entire 3-year period, he'll get full 5,000. If he leaves after 2 years, then he'll get 2/3. So it is the vesting period and the steps at which vesting option is given that will determine how much options will get accrued to an employee. And accordingly, your expense calculations will vary. Grant price. When I was giving options to Ram, I said, whenever you buy the shares of my company, you will have to give only 10 rupees. That is the face value. While the fair value today is 100 rupees. So this 10 rupees for Ram becomes the grant price or the exercise price. Exercise. Exercise is a day. So supposing Ram has worked with me for last 5 years, after completing 3 years, he has earned 5,000 options. Now he comes to me and says, please allot these shares to me because till now they are options. So Ram will come with the money, pay that to the company and seek the allotment. This process is known as exercise. What is exercise period? So from the date, so 3 years was his last vesting. After 3 years, in terms of the ESOP scheme, whatever period one will take, one will have. So say I gave Ram option to take ESOPs 1/3 each year. Now, after 3 years, I said, okay, in next 5 years, once you complete 3 years, you can take shares at whatever time you like. Now, this 5 years will become the exercise period. Am I clear? Any doubt till this point? I think we can take questions also in between if organizers permit. I think in chat box there are some yes sirs. But is there a doubt so far? Maybe somebody can say yes or no. No doubt so far. Okay. So we'll go back and we'll. So of course, advantages we all know it boosts motivation. We'll not spend time here. Now, this is something which we need to understand. What is the tax treatment? So we'll understand when we come to the tax treatment. Of course, company gains loyalty, performance, designation, present and potential. Now, ESOP structures. ESOPs can be given in a domestic company, can be given in a foreign company. So, for example, Google employees work in India. They earn ESOPs in the Google US because the US parent is a listed company. The Indian company is not separately listed. So now the employees which are getting these shares in India, they will be covered by the rules of international stock options. While in case, supposing I'm working with Flipkart India, and Flipkart gives me a ESOP option, a stock option, that becomes a domestic option. Now there are three alternatives in international, two in domestic. Direct route. That means I straight away gave you the option and you buy shares. That the route which we were talking about, Mr. Ram, That is the direct route. The second route is the trust route, which is reasonably complex. I think if we have the trust, yeah, we have the structure. And the third route, which is not available in case of domestic options, which is the share appreciation rights or SARs, which is available mostly in international options. So we'll one by one understand what these routes mean for us, because ultimately once we understand the various concepts involved, only then we can know what kind of accounting treatment we need to do, how it will affect our income tax, and what kind of compliances we need to do, what kind of measurements we need to do. So I think that is where we'll work. So when we go to direct route, company gives to an employee option to buy shares. Employee exercises option and company issues shares. The example which we gave for Mr. Ram, it is exactly of the direct route, and it is the most simplest form of structure for ESOP. How do we differentiate this to a trust route? In case of a trust route, company sets up a employee welfare trust, and on the date of grant of options, straight away issues that much shares to the employee welfare trust. The company itself grants a loan to the trust, and using that loan, the employee welfare trust will subscribe to the shares of the company. So uh, step one of grant of loan and step two of direct issue of shares happen. The third step will be that a company will issue these options to the employees. In the fourth step, employee will exercise the option, and on the date of exercise, the welfare trust will transfer these shares to the employee. And because employee would have made payment to the welfare trust, on this day, the trust will repay the loan which had come from the company. Now, what is the advantage or disadvantage of doing this kind of a transaction? The advantage is that the cap table looks clean. It is not talking of open options or diluted EPS. Everything is allotted. The disadvantage, of course, is that this structure is a little more complex and is more suitable for more organized and large scale companies. Typically, software companies like Infosys, TCS, Wipro, they opt for the trust route of ESOP structure, and startups normally work with the direct route option. So, of course, we'll leave this. We come to stock appreciation rights. Now, the difference between a stock appreciation right, kind of a stock option, and that in case of a stock appreciation right, employees never get shares. They never get options. What happens is, say, Mr. Ram joined Google today, and Google says, out of ETC, you have SARs, the stock appreciation right, of 200 Google shares. Now, in this case, today the market price of Google is $20. Theoretically speaking, I don't know the Google's real market price is. And he works with me for 2 years. And after that, he wants to leave employment. On the date he's leaving the employment, on that day, the company will check Google's shares market price. It will be, say, $50. So at that stage, the company will give him money from 50 minus 20, that is $30 into 200 shares. This is something which is known as stock appreciation rights. So this is something which is not very prevalent in India or not directly permitted by the Indian laws. So this is something which is more prevalent in the US. And US, most of the companies do not entangle employees to become a shareholder or do something. And they are listed companies. They straight away give SARs, and the price can be easily measured from a stock exchange where they are actively traded. So it's a very good option for an employee. They don't invest anything and they get the gain for the period of service. So it's a very good route. Let me go to the international route. You could have an Indian company and an overseas employee. Or you could have an overseas company, like I gave it by example that Google is there and an employee working in India. Transfer of ESOPs in Indian company to an overseas employee. In this case, ESOP scheme will create a normal scheme the way we are doing. We'll of course have to see sectoral cap, because overall FDI limits in applicable under FEMA, we need to see that overall FDI limits this should not cross. If I give to the overall employees, though most of these sectors are 100%, but still there could be restrictive sectors. And wherever investment is under approval route, then even ESOPs is also under approval route. What is approval route? So say I am an Indian company and I have a Chinese employee. So investment from China to India are currently under approval route. So I need to, when I'm granting ESOP, for that also I need to file an approval through the AD Bank in RBI. Issue of ESOPs to citizens of Bangladesh, Pakistan is what is easier. So China is a new addition about 2-3 years back. And the Indian company must issue the issuance of ESOP through RBI on the AD Bank. We'll have to report this as a FCGPR filing. I hope all of you are familiar with FCGPR. FCGPR is a form which we file whenever there is a inward investment into the company by a foreigner. So that kind of a compliance also we need to take care with RBI in case when we are issuing ESOPs in Indian company to an overseas employee. Am I clear so far? कोई डाउट है, कोई पूछना है तो पूछ सकते हैं. Does SAR not allot shares? Rishabh Jain says. So Rishabh, in SARs, there is no allotment of shares to an employee, but most of the companies work through the trust structure. So what they actually do is that whatever are the number of open SARs or the stock appreciation rights which are pending, whenever they grant the right, they buy shares of their company from the market at that price. And whenever they will discharge a particular employee, at that stage, they will sell the shares. I hope I have answered you to your satisfaction. Yes, I think I don't have any other queries as of now. Then we go further. Now, first we learned about Indian company and overseas employee. Now, second kind of scenario where it will be a international transaction will be where the company is overseas, like Google is the company whose ESOPs are issued, and Indian employee is involved. In this case, RBI says it has to be a cashless employee stock option. That means the overseas company cannot ask any money from Indian employees to be paid for such stock options. And in case of a ADR linked or a GDR linked option, then they can make payment because ADRs are normally linked to a listed stock exchange. And the Indian subsidiary and branch must notify. So why it says Indian subsidiary or branch? Because in any case, if you have an employee in India, either he'll be working with a subsidiary of Google, say Google India, he's working as an employee, or in case Google has not established a company, then they might have opened a branch, which is a permanent establishment, and accordingly they will do the ESOP filing with the AD bank. But FDI compliances, ODI compliances, in this case it is ODI. What is ODI? Whenever you remit money outside India or you hold shares in a foreign company, it is known as an ODI transaction. Whenever a foreign company holds share in Indian company, then it is a FDI transaction or an inbound transaction. FDI transaction are one thing, and outbound or ODI, overseas direct investment route, are the shares of the foreign company held by an Indian resident. Now, this is another aspect related to international stock options, which is related to saying, so if you have, supposing I have got which are allotted to me in Google US, or I have got stock options which are allotted to me in Google US. In both cases, these are assets and in the FA schedule of the income tax return, we need to disclose. Otherwise, of course, there is penalty under the black money law, which one has to suffer. So I think we'll skip this. Yes. Now coming to regulatory framework. We are on the conceptual part, and I think we are yet to reach the accounting and the valuation part. Unlisted company, Companies Act is applicable, and Income Tax Act is applicable. So for a domestic company, these are the two acts which are applicable. In case of listed, of course, listed company regulations become additionally applicable. And whenever foreign employee or a foreign company is involved, then FEMA becomes applicable. This, of course, we have understood. So this is the entire spectrum of regulatory framework that one needs to take care of while we are doing this work. So, of course, now there is no limit on the percentage of capital which can be issued as ESOP to a foreign companies. Companies have to adhere to what does Companies Act say? What is the provision? How do you ESOP how do you issue a stock option? So companies says that you need to have a board meeting. First step, board meeting you need to have an intent that you want to go for an employee stock option plan, and you need to have a draft scheme which needs to be adopted by the board. You also need to have a broad criteria on basis you need to allot these shares to your employees. Once this is done, then you call a shareholder meeting, which is known as the extraordinary general meeting, EGM. In the EGM, what you will be doing is that by way of a special resolution, the scheme has to be approved by the shareholders. And shareholders have to also earmark the capital. That means how many shares they are permitting the board to decide to which employees to allot. Employee-wise allotment, we may not decide unless and until there are certain specific percentages beyond which even employee-wise allotment has to be decided by the shareholders. But in most cases, employee-wise options need not be decided by the shareholders. It can be done at board level. Once the shareholders meeting is done, then along with Form MGT 14, we will be filing the copy of the scheme, certified true copy of the special resolution, as well as the ESOP scheme and the basis of allotment of options. That all will be filed with MCA. Once this is done, then step 2 will be that you will get a valuation of the fair value of the company done as on the grant date, whenever we want to make the first grant. And then the board needs to grant the options to employees. At that stage, we'll again have a board meeting. But now we need not go back to shareholders, provided we have done it within permissible by the shareholders. And once this process is done, then we will be issuing grant letters to respective employees, and then the period of vesting and exercise, all that will begin. Now, in case of Companies Act, I've explained this broadly. So board meeting 1, we will have an in principle decision. We'll draft the ESOP scheme, and ESOP scheme approved, prepared list of employees, class of employees, manner of selection, and then approval by way of a special resolution in the extraordinary general meeting. Then we'll be doing the grant process in the board meeting, then vesting, exercise, allotment of shares. This all we have discussed broadly. This, of course, these are the rules which talk of. So wherever 1% of issued capital we are exceeding, in that case, the shareholder need to specifically approve that particular grant. Coming to income tax, on the date of grant, there is no tax impact neither on the company nor on the employee. Whenever you get allotment of these shares, that means you exercise these shares, Then say we'll go back to our old example where Mr. Ram on the date of grant the fair value was 100. This is not relevant for Mr. Ram's taxation. This is relevant for company's taxation. So we'll just park it. We'll first understand Mr. Ram's taxation because there are two assessees involved. One is employee, one is company. So first we will understand the taxation in the hands of the employee. Right. So yes, I think there is a example here in the hands of employee. So say fair market value on exercise is 100 and exercise price was 10 rupees. So 90 rupees is taxable. This of course 20 rupees, 20% we can जो है this is something which we have taken a rate for simplicity. This has nothing to do with the capital gain tax rate. This is taxable at your slab rate, normal salary slab rate. This has nothing to do with the capital gains. Now, at step 2, when this employee holds these shares for less than 1 year and sells it, say, at 120 rupees, now 100 has become a cost, which is the fair market value as on the date of exercise. And 20 rupees becomes the capital gain on which capital gain tax is. And of course, if this is a long-term investment, then it will be taxed at 12.5% rate. So this is for employees. And in case of company, now say for example, we'll go back to our example only that on the grant date, the exercise, the fair value was 100 and the exercise price is 10. So the 90 rupees will be booked as an expense over the 3-year period, which is the vesting period. Now, how do we do this booking? So I said 1/3 of stock option at the end of first year, 1/3 at the end of second year, 1/3 at the end of the third year. So say for simplicity's sake, instead of 5,000, let us assume the options to be 6,000. So we have 2,000 options which will get vested in the end of the first year. So for first year, it will be 2,000. So for first year, it will be 2,000 into 90 because the entire difference has got vested for these 2,000 options in first year plus 2,000 of the second year into 90 by 2 because these options will get half vested in the first year and half in the second year plus 2,000 into 90 into 1 by 3 because these options will get vested over the entire 3-year period. So the first year you will have highest expense, second year you will have moderate expense, third year you will have lowest expense. Is this clear till this point or are there any questions? Rishabh ji says yes, it's clear. Anybody else with us who wants to add anything or ask anything? Muskan ji also says yes, it's all clear. So we'll go back. Accounting and valuation. Now, when we are talking of accounting, there are two methods. One is the guidance note, which is issued by ICI, which applies for the companies which are following AS, and Ind AS 102 for the companies which are following Ind AS. But I think more or less the guidance note and Ind AS talks almost the same thing. What we are doing is we'll have to use the Black-Scholes formula for doing the fair value approach, also known as the intrinsic value approach. Now, vesting, of course, can be of multiple types. Like I told you, 3 years, 1/3, 1/3, 1/3. This is called time-based vesting. What is a graded vesting? Graded vesting could be that maybe first year we are only doing 10% options. Second year we are doing 30% options, and rest of the 60% options get vested in the last year. So they are not equal. They are, increasing trend or decreasing trend. Then the third is milestone based vesting. So we say instead of period, we say you will achieve this particular goal, and that is when you will get a vesting of shares. Fourth is cliff vesting. That means end of the term normally. So after 3 years, straight away all the shares get vested. Nothing gets vested during the term. What is hybrid? Hybrid may be whatever, a combination of everything. But there is one more condition, that whenever the ESOPs are granted and they are vested, you will have a minimum 12 months period or 1 year period from the date of grant of options to the date of vesting of options. This is of course given under Companies Act. So intrinsic value method, of course, these are formulations and Excel, whatever we are doing. So this is again similar to what I was talking of. So in case of these graded vesting, so 25 options at the end of first year, 25 at the end of second year, third year, fourth year. Now each is treated as separate. So we do this calculation. So 24 after 100% after 1 year, 2 year, 3 year, 4 year. Now in previous example, 100% options granted, 25% went each year. And in this case, I think these numbers are not given here. Just give me 1 second. Yes, number is not given here. But practically what I have told you was, for first 25 entire expenses to be booked in first year. For next 25, in the first year 50%, second year 50%, third 25, 1/3 each year, and for fourth 25, 1/4 each year. So that is how this will be done. Accounting entries, whenever you are doing this booking of expense, you will say employee compensation or cost to company for ESOP options or whatever, to ESOP outstanding. This will stay in your outstanding amount, and this will be transferred to share capital and securities premium whenever the exercise of option happens. And in case the option lapse, then of course, whatever is the first entry, you are doing a reverse of that entry whenever the options are lapsing. So this is a very important tax planning tool also for companies which are profitable, because ultimately they give a tax expense without a cash outflow. There's no cash outflow which the company is doing, but the company is being allowed a expenditure. So this is an important tax planning tool which some companies use. Now, valuation aspect, of course, we broadly discussed. We'll go into greater detail. Of course, we have discussed share-based payments transaction. So, just a second, I'm thinking of what was. I think there is some message. कुछ कह रहे हैं? I can hear some voices. I think Miss Zoha, you want to say something? I think somebody needs to mute themselves. Their TV is on and we are able to hear that. It's causing confusion. So, yes. So in case of fair value, of course, fair value, of course, will be based on either quoted. So normally fair value, we do DCF for most companies which are unlisted. Wherever there's a listed company, then we'll do based on a market price approach. And these are the primarily the two models which we adopt to valuation of the topic. That is why I'm not going in greater detail on valuation and what is market approach, cost approach. And this is something which I feel is a little more technical for us to cover. And, I don't know. Yes, I think we'll go to the option pricing model, and here we'll understand the Black and Scholes model of valuation. So what is the option pricing model and the normal valuation? What is the difference? So if I just maybe just stop sharing it. Right. Yes. So I hope my board is visible to you. So say this is the grant date, right? And this point is the vesting date, and this is the exercise date, right? Now on grant date, say fair value of the stock is 100 rupees. On the vesting date, it is 150 rupees. And for simplicity sake, we are saying only 1 year as the term, right? And say on the exercise date, this again is another 1 year period, and this is 200 rupees, right? So now on the date of grant, the company will need a valuation report, which is of the fair value of shares. That means 100 rupees. On the date of vesting, company will again need this 150 rupees. No, sorry. Company will not need this report. Company on the date of exercise will need this 200 rupees report. Why? Because this 200 minus 100 rupees is taxable in the hand of the, sorry, not 100, 190. 10 rupees is the exercise price, so 190 is taxable in the hands of the employee. What is tax deductible in the hand of the company? 100 minus 10, 90 rupees. This 90 rupees will be allowed over the vesting term. Now, in this case, it is only 1 year. So it is very simple. But say 31st March is 3 months after the vesting. So you need a value. When you need a value, then that is the time when you need the option pricing model report. And I think we'll again go back to screen sharing and so in Black and Scholes, this is the formula, this is the model which is most popular and required to be used for most of the option pricing strategies. Now, I think a lot of stuff which is quite a lot technical, and that is why I'm skipping it. Because I understand we are dealing with CS students, and most of you might be looking at this for the first time. So I think we'll straight go to the Black and Scholes formula. So Black and Scholes formula, you will have primarily the current price of the underlying stock. That means the price as on the grant date. That is what you need to fill in the current price. The dividend yield, in case there is a dividend which the stock is earning. The strike price specified in the option contract, that in our case will be 10 rupees. Risk-free rate you can pick up from the government bond rate, 10-year bond rate. The time remaining as at the end of the financial year for which you are doing the valuation for the contract expiry, and the standard deviation. Now, basics, this is a formula which we normally use, but of course we all understand that calculating this humanly is very difficult, and that is why as soon as you do Google Black-Scholes ESOP valuation calculator, and you can also say Damodaran. So you will find a Excel file which is given by Aswat Damodaran. The valuation guru is a person of Indian origin, a professor in US. And that file has a looks something like this. So stock price now 50, exercise price in this case is 50 only. So number of periods to be exercised 5, compounding risk-free rate, standard deviation, and then the data is getting calculated. These all are the output data is not what we are doing. Value of call is 27, value of put is 19. So in this case, put is not relevant, call is relevant option. Why call is relevant? Because the price. So this is both given as 50 here. So let us assume that one is 10 and the other is 50. Only then we will get a right picture. And accordingly, 27 is what needs to be expensed off. This is how the calculation is done. And I think these are the broad things which, of course, I could cover. And I can, of course, go more detailed into the valuation piece. I can go more detailed on the expense side. I can explain things. But I think what I'll suggest is that we have some sort of uh, searching questions from your side. I think that is how we'll be able to better understand the concept. Because if it will be a monologue, it'll end like a class, which you may or may not remember for future. So my suggestion will be that if some students can raise some queries, whatever they have understood, or maybe if they have understood everything, then maybe they can speak out what they understood about a particular subject. Maybe we can start with Harsh or Mukul or Muskan, any one of you. Anybody, any questions?
Yes, sir. Good evening, sir.
Good
So,
evening, Ji.
so I was asking कि जैसे ESOPs हमारे basically for motivating the employees होता है
हाँ
जो plans given होते हैं but
हाँ
आजकल तो like there are things कि जो in फ्रीलांसर्स का एक काफी ट्रेंड स्टार्ट हो गया है पीपल वर्क एज फ्रीलांसर्स तो इस
हाँ
चीज का जो इफेक्ट आता है जब डिजाइनिंग होती है इस शॉप की बेसिकली दैट इज डन इन इस पर्सपेक्टिव से एम्प्लॉयज को देने के लिए बट फ्रीलांसर्स आजकल एक बहुत इम्पोर्टेंट क्या बोल सकते हैं हम कि एक रोल प्ले करते हैं एंड वी टेक सर्विसेज एंड प्रोडक्ट्स फ्रॉम देम ऑल्सो तो उनको तो हम रिटेन नहीं कर सकते इस मेथड के थ्रू तो उस चीज के लिए कोई मतलब मॉडिफिकेशन आ सकता है पॉलिसीज में
So if you would have seen the presentation in the beginning, we discussed three kinds of stock options.
यस
One
ESOP
is
ESOP
ESOP, ASOP,
ESOP
and
एंड
ESOP. So
या
ASOP, जो option है,
यस
that is relevant for freelancers because freelancers are not full-time employees, but they are advisors or consultants,
यस
and accordingly, freelancers can work with advisory stock options. So उनको advisory मिलता है सिर्फ इसमें difference क्या आएगा instead of the ESOP scheme which we have got approved as a special resolution. We will go if we want to say bulk approve for multiple advisors or future advisors, then we can even go for a advisory stock option scheme, or in case it is for a specific advisor, because normally such advisors to whom stock options are given are not many. They are 1, 2, 3 in the company. Then we can even go for a specific approval of the agreement with that particular advisor in terms of what are the KRAs, what are the milestones, or what are the timelines, and how many stock options will get allotted when, and rest everything in terms of the taxation, or in terms of the process, or in terms of the valuation requirement, or the stock options, all will stay more or less the same. Similarly, in case, say, you are a promoter of a startup, today you get $2 million, and the investors are not very confident. They say, okay, I'll give you $2 million, but I'll pick up 20%. You say I don't want to give more than 10%. They say you give 20, but I'll grant you ESOPs of 10%, and you can apply those ESOPs in future provided you achieve these milestones. So of course, this is not a very tax efficient structure for a promoter, because he will entail tax payment as an outflow just to get back into his company as a 90% shareholder or a 85% shareholder. But there is still a methodology by which you can increase your stake once it has been diluted without bringing in more capital at fair value levels. So it is still adopted by a lot of founders to, bring back their stake whenever they are able to, make the companies profitable or grow further. And this normally is done, of course, as a pre-IPO kind of a investment from the founders' end to increase their stake.
Yes, thank you
I
so
hope
much.
this I have answered properly.
Yes.
And anybody else? Rishabh ji, Vibha ji, Naina, Nanny. I think I have few audience, so I'm taking my name. आपका जिसका भी अगर कोई भी डाउट हो तो आप पूछ सकते हैं. I think I'll be happy to discharge whatever doubts you have with ease before I hand over the mic or proceedings back to the CIRC Sikasa team of Meerut branch. So I think there are no more
Sir,
doubts. हाँ बोलिए please मुस्कान जी बोलिए.
sir, one more thing. Is it true when there is a merger or acquisition, so
हाँ.
the ESOP holders lose their value on ESOP means when there is any merger and acquisition in the business that the ESOP people do suffer with the loss from.
No, ESOP people will not suffer with a loss, because ultimately in any merger or demerger, the share exchange ratio is based on the fair value of the shares of the company. And whenever you hold shares of one company and your company has merged into another company, then you will be allotted stock options of the resulting company. But of course, their number, so you had 200 options in company A. Now, company A and company B both have merged. You may get 200 options, you may get 100 options. The shareholders of 1:1 or 2:1 as a swap ratio. So ultimately, the swap ratio which is there for the shareholders of the merging entity, the same ratio will apply on the ESOP holders also, unless and until the scheme says something otherwise. Because sometimes scheme can say that all these stock option holders will be compensated by way of bank payments rather than allotting them stock options in the new company. So this is again customizable as per the scheme, and in any case subject to the approval of the shareholders with the special resolution and creditors with the normal resolution.
हेलो.
Anything else, please?
हेलो.
ऋषभ जी. हाँ जी ऋषभ जी.
सर, आपने एमसॉप का बारे में मेंशन करा था कि मैनेजमेंट और शेयर होल्डर्स भी कर सकते हैं, प्रोमोटर्स.
जी.
सर, फॉर एग्जांपल प्रमोटर होल्ड कर रहे हैं 60 to 70%. तो
हाँ.
अगर वो ऑप्शंस अपने में मतलब अपने नेम पे वेस्ट करते हैं, तो उसमें मतलब रिक्वायरमेंट मतलब होती है इन्वेस्टर्स की जो 32 पर मतलब वीसी फर्म कोई होल्ड कर रही है तो.
देखिए वीसी फर्म्स नॉर्मली जो है, पहली बात तो शेयर होल्डर्स अग्रीमेंट जरूर करती है. तो ऐसे कोई भी जो शेयर्स या स्टॉक ऑप्शंस अलॉट होंगे प्रमोटर को, वो बिना उनकी स्पेसिफिक कंसेंट के नहीं हो सकते. इन योर केस द रेशियो ऑफ वीसी फर्म इज इन हायर केस इज हायर ऑफ 25%. तो इन एनी केस बिना उनके रेजोल्यूशन, स्पेशल रेजोल्यूशन पास, स्पेशल रेजोल्यूशन 75% और मोर की मेजोरिटी से पास होता है. So that is not possible in your particular case. But let us assume shareholders were holding 85% also, promoters. and the VC firm was say at 15%. Even then, the VC firms will have specific rights for their
Okay.
protection. And in case a promoter is taking them for a ride, that means the promoter is doing something which is hanky panky, which is not appropriate in terms of law, then and they don't have a special right to protect themselves, then they can file a petition with NCLT under 391 to 394 of the Companies Act, which is Operation and Mismanagement section, where the minority which is oppressed by the actions of the majority can seek redressal and fairness from National Company Law Tribunal. So I think I've answered your query, and I don't see much questions coming in. So thank you so much, Gyati Gupta ji and your entire team for organizing this, and wishing you all the very best in all your endeavors. And handing over back to you. Thank you so much. And again, I think sincerely sorry for joining late as compared to the committed time. I'll be more careful in future.
So we are really thankful to you that you spared your valuable time, and despite this misunderstanding, you didn't postpone the session, you didn't cancel the session, but you took this effort and you came. So it matters a lot to us. So thank you so much, sir. Over to Muskan.
Thank you so much, sir. To conclude this insightful session, and we would like to say thank you to all the participants as well for their enthusiastic participation and for keep this flame ahead. We will be having another session tomorrow as per the decided topic and the decided speaker. And we are very thankful to you too, sir, for sharing your insights about this insightful topic, that is the ESOPs and their intricacies. And we would love to have you again for another session someday. And thank you everyone for joining us. And we will be signing off this session from now. Thank you.
Yeah, I think I'll just say that I've put my website there, and in the presentation section, you can just go and download the presentation which I used for today's seminar. I'll of course send it to Gyati Gupta ji so that she can circulate it amongst the participants who had joined this also. Thank you so much.
Sure, sir. Okay.